Hey everyone, it's Evan from the Trade Risk, Tuesday, October 14th, and I'm here with my midweek update. So we'll kick it off with the SPY, and you can see today we almost had an inside day, but we did pierce below yesterday's lows just briefly. We did manage to close above yesterday's lows, but we did close red on the day. And you could see with the tails on both end here, you could see sort of the indecision. The bulls had the ball for a little bit during the day, then the bears retook it, and back and forth we went. And that really is the story here. It's just that the pickup in volatility is just extremely elevated from the levels we've seen previously, prior to the month of October. So, the bigger picture here, my real support levels that I'm watching is this little mattress of support around 185 to 186 in the SPY. We are pretty oversold, but we're staying oversold, and you can see we're just wrestling around, kind of chopping around a range here. So it'll be interesting to see how how this week progresses. But for now, I mean, it's really tough to be optimistic, bullish here. I think we are. At any point we're due for a bounce, or a squeeze, and I say that because it can happen at any point. And there's no point in trying to pick when that is, or it's going to be hard to do that. So I think you just need to kind of stick to your plan. Less is usually more in this type of environment. Unless you are a really active short-term trader, then this is great for you. The IWM here, it's just still in breakdown mode. 108 was the major support level we were watching. It did break down. We're chopping below it. It managed to actually close green just slightly. You can see a big topping tail on today's candle, but basically in pretty much the same boat as the S&P. So we'll jump into some other markets here. First is oil, and really harsh sell day today on oil. And this, you have to back up here to really a weekly or a monthly chart, but a weekly chart really shows the picture of this just 4 or 5, almost 6-year, 5-year base here that oil has been in, and it typically is just, we're at the lower end of this range now, right around $30, and you can see we sort of just have been chopping back and forth between 30 and call it $40 for the better part of 5 years. So we're at the lower end here. Is this going to be a complete breakdown of this massive range? That'd be really scary. That'd be awesome for gas prices at the pump and everything else. But let's see how it happens. I don't really play too much oil, but it was a very significant day, down 4% on the day, especially given the downtrend that it's been in. And that follows suit with natty gas. Still not quite in a breakdown like we saw in oil, but it is riding along this lower support here, right around $20.50. It's still holding. Let's see if this is just a little quick false breakdown, or if this leads to a continuation of the move, this downtrend from June down into the July month. Next, banks. So we did have some banks reporting earnings. Honestly, I forget even which did. I don't think Citigroup, or actually maybe Citigroup did today. But you can see not too much change with Citigroup. It's still in the context of this larger $46.50 to $53 range, just a bunch of chop. Bank of America has, sliding down just a little bit here. Not too much else to say about it. Sort of a choppy chart. Short, intermediate term uptrend still intact. Wells Fargo, this one probably was the one that reported earnings today. A pretty nice breakdown here below this $49.50 range, and it's retesting sort of the second quarter prices here around April, May of earlier this year. So a little bit of damage there. J.P. Morgan. Started with a pretty good gap down, closed pretty strongly actually, but it still didn't really change a whole lot. It's still trapped underneath this $60 breakout level, and it's still more or less pretty choppy. Now for more interesting names, Apple. So this is a name I'm actually short. I grabbed some short a little prior to the close, around $99.30, $99.25. Something around there, and I held it. It's not a full-size position for me, but the action today was pretty weak. It was definitely an underperformer on the day. It still doesn't mean a whole lot yet. We need to see 98 get taken out, and I think this move is almost could be considered muted, because structurally nothing really changed. What we did yesterday and today kind of confirmed it is we did break below this little midline kind of point of control that I've had drawn here, which does tip sort of the favor to the bears now for them to see if they can make something happen on a downside move. So it's no real, it's obviously no opinion or anything I have against the company. Looking for a technical breakdown here. That's all. I have essentially half my position right now. I'll be quick to stop out of it. I won't even let this get above 100 before I stop out. So I just want to see if I can, with today's action, I don't want something like a gap down to happen tomorrow and then it's just chase mode. I think the risk to reward here, if I have to risk 50 cents to get a potential, $3, $4, $5, $6 breakdown, I'm not speculating or I'm not saying that's going to happen, but the risk to reward makes sense. And with today's price action, I'm willing to go for it. So we'll see what happens with Apple. Facebook, next one here, it is finding some support, or it did today, around the $72 level, which basically was the lows that we made back in August, which was right after the earnings release. So, we did get a pretty nice bounce off that level. We closed pretty strong. It didn't change a whole lot in the bigger term structure of everything. I think really you need to get back above $76, but the fact that we can stop the bleeding and put in this much of a bounce in Facebook is at least promising. Nothing I'm going to touch just yet, but it was slightly constructive there. Not as much in Twitter, but sort of in the same camp. We do have a nice bounce off of the lows today, right around $47. It needs to get back above 49, and then really it needs to take out 53 to regain momentum. I think it's still a ways away from that. Earnings release will probably be the catalyst for both Facebook, Twitter, and even Apple. Tesla, next name here. It's still inside day today. It stopped the bleeding essentially. It didn't continue lower, which was good, but really not a whole lot else to say. It's still in this longer term, 218 to 260 range, which is pretty wide. But until something a little more constructive happens there, I don't have too much else to say about it. Amazon, again, this one similar, doesn't look too good here. 320 is the resistance on the upside. It is finding some support down here around 305, and then you have the year lows down back in May that we made around 285. So hopefully Amazon can stay above 300. If it can, then maybe it can start to get a little more constructive. But for now, momentum's in the bear's court. Netflix, this one started leading to the downside a little bit early, if I remember correctly, back in mid-September here, and I think this was one of the weaker ones that showed some signs of cracking when it broke this upper range here around 470. But since then, it's really it's gone sideways, and I wouldn't say it's necessarily constructive, but it's slightly outperforming some of these other names, especially for the month of October. So. Netflix is interesting, still in a pretty wide range, still pretty messy. Longer term, I mean, it's just sort of hanging out, digesting. We'll need more time with it. Alibaba, this one, got a nice little bounce off the lows like a lot of other names. Still not very interesting. Hasn't done much except for, sort of grind lower since its IPO. Needs to get back above 89, 91, something around there. Start to grab my attention on the long side. Otherwise, it's probably a favorable short. GoPro, this one, finally, coming off from its epic run that it had for a few months. It didn't take out yesterday's low, so again, stop some of the bleeding. But, it needs to really sort of go sideways here, see if it can carve out some type of base and then make another run for the highs. We'll see. $80 is a first resistance level, basically today's highs, really. And then, if it can start climbing back higher than that, could get a little more interesting. Some of the big momentum names recently, or where the action has been some of these plays off of the whole Ebola scare. And Lake Industries, so this one, saw 26% move to the downside today after moving 300% since last week. So it's crazy move. $20 move in this type of name is pretty that's a pretty big move, and today finally saw some of that froth come out of it. Who knows if it'll lead to more downside follow through, or if the bulls will step in here and just buy this dip. When you have a trend that's really strong in a big down bar like that, usually it's sort of a buying opportunity. It's not always the case, and I'm not recommending going out to buy late because I sure as hell am not. But keep it on your watch. It's a great intraday vehicle for trading, and it offers some pretty explosive moves intraday. Same thing here, Alpha Pro APT. This one really coming off today. So same thing as Lake. Just keep it on watch. It's a nice vehicle for intraday trading. I wouldn't want to hold it either way overnight. Gilead. So this one saw some of the wind come out of it. This one's been a pretty strong performer as of most of this year, really. And I don't know if there was news behind it. Probably was, but I don't know what it was. It was, but it definitely had some action in here today, selling off just a little bit. So it's going to need some time to get, to kind of catch its footing. So it's not too interesting right here, just an intraday vehicle for now. But this one's been a strong performer this year. JCPenney. So this one, I was touting this inverted head and shoulders pattern I felt like I posted this thing probably like 8 times, back in July, August, September. And, I was involved in this trade for a while. I got out of it, basically when it broke this upper range here, when it didn't act so well, I stepped aside and, I really was hoping to get this back above $11 and jump back on board this pattern. And I had optimistic thoughts for JCPenney. It never happened. And this is what happens when a big pattern just fails. So on a larger time frame, or obviously on a daily, you can still see it here. This pattern tried to ignite. You get this nice big range breakout here, went sideways, fell down a little bit, got a little bounce, and then just rolled over and collapsed. So JCPenney pretty damaged here, not interesting at all. It's trying to hold on to this gap level here. So below $7, there's this big gap here back from March. It's going to come down to earnings. So get the new CEO in there. We'll see what happens. But JCPenney is definitely, some pretty damaged goods right now. All right, so now let's look at some setups going forward. CL, Colgate. This is a short setup. Posted this yesterday. I think below $64, this one could get going again to the downside. Had this impulse leg to the downside end of July into August, went sideways, so it's sort of bear flagging here. I think below 64, really below 63, you could see some more downside action. AZO, AutoZone, a lot of these parts manufacturers, cars, AutoZone, and all the others that I can't think of right now, they all have been pretty weak and been in some bearish formations. AZO is a pretty interesting short setup. It's been holding strong here, though, for a while. I thought this move back here at the beginning of September would be it, but it wasn't quite it. And my dog's barking. So below 500 really is where this thing's going to pick back up and could get some downside follow through. So keep that one on watch. Next is Hershey, HSY. I think below $92, this one could really get going. That to the downside again. It's sort of in this bear flagging pattern. It's been in a downtrend for most of this year. Since March, it's been heading lower. August, it did get some fuel to the upside, but now it looks like it's struggling again. I think below 92 looks interesting. And then some setups for the bulls going forward. I think MRIN, Marin Software. This one could get going. I thought it was going to get going today. Almost pulled the trigger on it. But we faded enough that I didn't want to be involved. I think above $9, above $8.85, something above today's highs essentially. This one could get going. There's a lot of supply right here in this $9, $9.50 range, but it's been a pretty weak one since its IPO back in 2013. But it's been putting in a pretty good base now. So let's see if it can do something with it. NYRT, this is a REIT, so maybe not be a fast mover, but it is a recent IPO. In this type of environment, when money's sort of fleeing to the safety names and to the consumer staples, so on and so forth, these REITs could perform pretty well here. I think above 11.05, get you a little bit of momentum in this name. and you get paid a dividend that I don't know what the amount is, but that's a one to keep on your watch. And finally, another one is HCT, which is another REIT, and this one recent IPO as well. It's got a pretty defined $11 level of resistance. So this one almost got going again today, faded enough. I didn't grab anything, but I think above today's highs might be an interesting play to the long side to hide out during this correction. So that's all I have for today. Hopefully my dog barking didn't interrupt things too much, but it's still a tricky environment. Volatility's definitely elevated. There are lots of things that are moving pretty fast intraday. So it offers some new opportunities that we haven't had, frankly, in almost 2 years. The amount of intraday volatility that we're seeing, and just the index alone is pretty interesting. So, and I hope that helps. Good luck trading, and I'll catch you next time.